No, look, I think, again, very similar to that period in 2018, we had the steady drop from, we went from 10
Right.
all the way down to, we went from 20 all the way down to 8, then we bounced to 14, then we went down, so it was basically 14 to 6, kind of all during spring and summer, physical spring and summer of 2018. And into the fall, we just hung out at 6, and we made that descending wedge pattern, and you just bouncing off the 6.
Mm-hmm.
And then bang, November 14th, we were down the 50% down to 3,200. And we hung out at 3,200 until December 18th. So about a month. And then we started up. And again, it wasn't straight up. It was up and then down, but it was these ascending patterns. It was higher lows, higher highs. And it doesn't mean we don't have roller coaster, but instead of the roller coaster being that flat or worse down, the leverage is gone, the weak hands are gone, the sentiment is pretty negative, right? People are like, oh, it's over. It's probably not as negative sentiment as I would like to see it, right? I'd like to see like really people saying it's going to zero, going to zero, going to zero. And I haven't heard from Peter Schiff in a long time. But on the macro thing, look, you are focused, as always, on the question. And the question is, can Bitcoin do well? Can digital assets do well in a nasty economic environment? And let's remember that back in 2018 into 19, there was the threat of rising rates, and we weren't sure that the economy was going to rebound. It did a little bit once they stopped the threat of raising rates, but we weren't like really robust. But the environment that's great for wearing the orange shirt is when there's easing and devaluation of currency, which is the exact opposite of what we have now. And I think I think part of it is, and I'm not sure why people are so willing to switch narratives. So on this thing about worrying about the macro environment means people have started to believe this narrative that Bitcoin's a risk asset and that it's correlated to stocks and it's just another speculative asset. It's not what it is at all. Now, we talked about this last week that, look, my personal pet peeve, and I've taken a lot of crap, okay, technical term, in the past few weeks. Everybody's like, oh, you suck and BlockFi and you lost all this money. I'm like, guys, I have had tons of losing investments in my career. I mean, tons. And I'm not proud of that. I mean, I'd like to win. I like to make money when I invest, but that's the nature of the beast. If you get upset about losing money, you're not going to make any money ever. And I've talked about this over and over. Winners in this business lose way more than losers, because losers, and it has the potential to displace the entire financial system, the rails, the savings mechanisms, the spending mechanisms, all of it. But that don't happen if we don't build robust institutions and stop with the tribalism and the FUD and the, oh my God, you just got to clutch it and never use it and never spend it. Now, that's stupid. And so that's a long-winded way of saying that I didn't answer your question.
Yeah.
Which is, look, I don't believe that Bitcoin's a risk asset. I just don't. I believe that it is a fundamentally different asset. It is 0.0 correlated to bonds over the life of the asset. It is 0.15 correlated to stocks over the life of the asset. And that's because its return is derived not from the things that stocks and bonds are derived from, which is GDP growth, interest rates, productivity, Fed policy. It's derived from millennial adoption, right? Young people saying, I want digital value by the technology itself, by regulation, and by, usage and adoption. And so those things aren't impacted by macro, but in the short-term period, when you have liquidation cycles, which we just had, and use beyond just digital gold. Digital gold, everyone says, well, you got the old guard, right? That is not the original vision. And they did a fork, and it's called Satoshi's Vision. And then we got another fork called Bitcoin Cash. And those have really not had much adoption, usage, right? Not that many people went that way. And everybody seized on this idea of, well, digital gold. Okay, fine. That is a perfect use case. But that's a use case, a single use case. But remember, gold has two uses. It's got its commodity use and its monetary use. So you can use gold and fill your teeth with it. You can put it in electronic circuits. You can, stack it up and use it in other industrial ways. But it also has this monetary value. I mean, jewelry and stuff. You can mold it into other stuff. But it also has this monetary use. And better is you can take that monetary value and you can use it as collateral. The embrace of users, like real people that put it in their wallet and hold it and use it and transfer it, and not in the Bitcoin pizza way, but in the, hey, I have value and now I can use that value. Well, how can I use the value? Well, I can use that value as collateral. I can use that value to swap value. Ooh, maybe I could even use the technology behind the value, like what Strike's doing, to transfer fiat on top of a better technology rail. And once more people catch on to that part as a speculative asset, hoping, praying that he could make some money to cover up the fact that he has a company that doesn't. The company doesn't make money. They lose money on every car that they sell, right? They lose money, and they will always lose money. And it's an amazing Ponzi. I mean, it really, really is. The only way it survives is by raising money, right? The only way it survives as a business is by raising external capital. And look, is Jason Williams, my partner, had this great line the other day. He says, I'm just so sick of this. People talk about, oh, it's environmentally friendly. Are you joking? Have you ever actually studied what it takes to create the batteries, what it takes to recycle the batteries,